Hey friends, welcome to the Singapore Market Digest for November 15, 2024. I'm Iggy from the Investing Iguana, and today we're diving into what's been happening on the SGX. The Singapore market has been showing some interesting movements this week, with several key companies making headlines. Before we dive into specific stocks, it's worth noting that the broader market sentiment has been cautious following recent developments in global trade. The US has recently imposed significant tariffs, which has created some uncertainty in markets worldwide. Interestingly, while many Asian currencies initially weakened against the US dollar following Trump's election victory, the Singapore dollar has actually gained about 2.9% against the greenback this year. Let's start with SATS Limited, the aviation and food solutions provider that many of you are familiar with. SATS shares closed yesterday with an impressive 7.7% gain, jumping $0.09 higher to $2.65. This significant movement comes on the back of some exciting news about their cruise terminal operations. Terminal operator SATS Cruise Services, which is a joint venture between SATS, holding 60%, and European cruise operator Cruises del Port de Barcelona, holding 40%, has announced major refurbishment plans for Marina Bay Cruise Center, Singapore. The company is investing $40 million in upgrading works that began earlier this year. These improvements aim to increase the terminal's handling capacity, modernize amenities, and introduce new facilities to enhance the overall passenger experience. For those of you who've traveled through the cruise center, you'll know this is a welcome development as Singapore continues to position itself as a key cruise hub in Asia. What's particularly noteworthy for investors is that SCCS has secured an extension of their operator agreement for the cruise center. The agreement has been extended for 8 years, with an option for another 2-year extension, potentially allowing them to operate the facility until March 2037. This long-term agreement provides SATS with a stable revenue stream for the foreseeable future. For context, Cruise is a subsidiary of Global Ports Holding, which is an international cruise port operator with significant expertise in the field. Moving on to another major player in Singapore's corporate landscape, Capitaland Investment has been making strategic moves to expand its presence in India. Their lodging business, Ascot, has recently signed 3 agreements that will add 600 units to their India portfolio. This expansion will grow their total portfolio in India to approximately 6,100 units across 22 properties, representing a significant footprint in one of Asia's fastest-growing economies. The new units will be located in diverse locations across India, including the cities of Lucknow and Tanjavur, as well as in the popular tourist state of Goa. These locations offer a mix of business and leisure travel opportunities, allowing Ascot to cater to different market segments. What's particularly interesting about Capitaland's India strategy is their ambitious growth target. Ascot plans to more than double its current India portfolio to around 12,000 units by 2028, up from roughly 5,500 units at the end of 2024. This aggressive expansion plan reflects the company's confidence in India's hospitality market, which continues to show favorable growth prospects according to their Thursday announcement. Investors seem to approve of this strategy, as Capitaland Investment shares closed $4.10 and higher at $2.50 on Thursday. This positive market response suggests that shareholders see value in the company's international expansion efforts, particularly in high-growth markets like India. On the macroeconomic front, there's some significant news regarding Singapore's monetary policy that investors should keep an eye on. The Monetary Authority of Singapore, MAS, which uses the exchange rate rather than interest rates as its primary tool for stabilizing prices, is expected to ease monetary policy settings further. This comes just days after U.S. President Donald Trump announced the steepest tariffs in a century, which threatens to disrupt global trade and could spark retaliatory measures from other countries. According to a Bloomberg survey that closed on Wednesday, all 14 economists forecast that the MAS will reduce the slope in the policy band of the Singapore dollar's nominal effective exchange rate, or SNEER, on Monday. This potential policy adjustment reflects Singapore's need to maintain economic competitiveness in an increasingly uncertain global trade environment. The relationship between trade tensions and currency movements is particularly relevant for Singapore as a trade-dependent economy. While the US dollar gained against many Asian currencies following Trump's election victory in November, the picture has become more nuanced recently. Investors have been selling US assets in response to higher than expected tariffs, which has contributed to the Singapore dollar's relative strength this year. For investors in Singapore-listed companies with significant international operations, these currency movements could have material impacts on reported earnings. Companies with substantial US dollar revenue might see translation effects if the Singapore dollar continues to strengthen against the greenback. That's the scoop for today. We've seen positive movements for both SATS and Capitaland Investment, with their shares up 7.7% and 4.2% respectively. SATS is investing in cruise terminal upgrades and has secured a long-term operating agreement, while Capitaland is aggressively expanding its hospitality footprint in India. Meanwhile, Singapore's central bank is expected to adjust monetary policy in response to global trade uncertainties. Remember to do your own research before making any investment decisions. This is Iggy from the Investing Iguana, signing off.